Happy New Year, everyone. This is Corey Mitchell from TradeThatSwing.com. This is your swing trading stock market outlook for the week of January 9th. My process is the same each week. I go through a stock market outlook based on how major indices are performing, market health indicators, recent watch list performance, and trade performance, and what sectors are moving well. This is basically the first part of my overall trading process for swing trading stocks, which is looking at how are overall market conditions. If market conditions are good, then I go ahead and take individual stock trades, checking out their patterns and triggers for actually getting into the trades. So heading into the week of January 9th, conditions are okay and improving. And I will start adding some positions this week if conditions stay favorable. I had some prior positions from several weeks back which are doing quite well and nearing profit targets. If those get me out, then I won't have much exposure, so I am looking to add some trades this week. Let's look at how the indices are doing. So we're looking at several different indices here, each looking at a different segment of the market. You can see the little write-up here, but we can basically just go through it on the video. So things that are concerning is that we're still in this overall downtrend. You can see we're still making lower lows, lower highs over the longer term. Short term, we had these nice uptrends going, at least in most of the indices. The NASDAQ's a bit weaker, but in the NYSE composite, we had this nice run higher. In the Russell 2000, we had this nice little short-term uptrend. That got broken late in the year. We dropped below these lows. So that put us back into a short-term downtrend. So we had long-term downtrend and short-term downtrend. Not ideal. But we built these little bases in these, at least these indices, the NASDAQ again, a little bit weaker, but in these ones, we popped out of it and we're trying to push back up. And you can see the Russell or the NYSE composite, we're pretty close to those prior highs. And this run up got pretty close to that prior high. So this one's, potentially turning into an uptrend. We'll see if we continue above these highs and above that. That would be a nice indication of that. With these ones, we need to do a bit more building, but we could still get the short-term uptrend here if we start pushing up. We get the pullback and start moving up. That creates the higher swing lows, the higher swing highs. That's the basic tenet of an uptrend and what I really look at in terms of price action. So we're just on the cusp. We'll talk about the health indicators in a bit. They're good. So that's why I'm willing to take some longs. And this is, pretty early in what would be a possible start of a short-term uptrend. But we did have this movement up earlier on, which was nice. We've had this pullback, starting to move up again. So that's favorable. TSX, it had moved above its major swing high back here. I believe that was August. And we moved above that. We did have the pullback. We broke below some minor lows here, but we had a strong day on Friday starting to push up. So I would say these uptrends still have a possibility of being alive if we see this push upward. India had been really strong. You can see it's broken down the last few days and hasn't really recovered like the US indices have. So we'll see how that one's going. It's just up there because it had been doing well. In terms of stock market health indicators, these just help me get an assessment of how the underlying strength of the market is. Because sometimes I love price action. I always trade based on it. But I also like to look at some of the underlying health things because they can give us tips or clues as to how the market's doing underneath what we're seeing on the chart. So again, the write-up is down here, but we can go through them on the chart. So this top one is how many stocks are above their 50-day moving average. It is a good indication of stocks in uptrends. You can see during downtrends, most stocks are in downtrends. It's not going to be an ideal time to trade. And when these lines are above, it tends to be more of an uptrending period. So right now, we're right on the cusp. Kind of right near that 50% mark. I find it a lot easier to make money when most stocks are moving up and I'm buying. That just, kind of makes sense. So right now we're right on that cusp. We're starting to turn up. So this is good, but on the cusp we want to see this, continue to move up. Volume, not super important at this time unless we did have a follow through day here. This is just based on a pullback. So not a super important one. The follow through day down here at the major bottom was more important, but we did have this push higher on increased volume compared to the prior day, and it was about a 2% and a bit upside move. So really strong day moving out of this range. I would like to see it continue up out of this little range that I've drawn. This is the average daily movement. Or I shouldn't say average, it's just the movement per day. And during volatile conditions, we tend to get really big figures like what we're seeing. We see 2% up, 2% down, 1.5% up, 1.5% down. And during uptrends, you would see more action like this very small period here, where we're moving up 0.1%, 0.2%. We're dropping 0.2%. Market's much more calm. So overall, we are still in very volatile conditions, as we have been for over a year. But at least we haven't seen any 2% drops in a day in the last 3 weeks. So that's a good thing. But if this volatility continues, it's only a matter of time before we see it again. So this one's kind of maybe an okay for the short term, but it's still not ideal. For an uptrend to really take hold, we're going to see volatility drop off. This is the NYSE Advanced Decline line, and it is moving up nicely. And it is almost back to this high point, which corresponds to this high point on the S&P. So it's actually positively diverging at the moment, which is a good thing to see. So this one is a nice strong thumbs up. December 29th had a positive for this indicator. This is up volume divided by total volume. 90% and 10% are the levels I look at, meaning we either have huge volume to the upside. It's almost all the volume for that day was in stocks that moved higher. That's a good positive sign. We had one of those on December 29th, if I recall. And we've had a couple other days very close, but not quite at that 90% level. And then the other way I look at it is if only 10% of the total volume for the day was in uptrending stocks or stocks that moved higher on the day, that is not good. But we haven't had any of those for a while. So that would be these tiny bars down here, which basically means there was very little up volume on the day. So overall, we have a lot of thumbs up, and that's a good thing. That gives me the thumbs up to take some trades. We do want to remember what we had talked about here as well. So price action, not 100% clear at the moment whether we're going to enter a major uptrend or we're going to continue down. So that's unclear. Health indicators good. So basically you want to decide based on that how much capital are you willing to deploy. This is not a time to deploy 100% of your capital, I don't think. At least in my opinion, I'm not doing it. It's also not a time to only be 5% invested or 10%. So I'm kind of going more around the 30, 40, 50%. If this continues to improve, then I will add more positions and have more capital deployed. But it's not 100% great market conditions. In great market conditions, we have a clear uptrend. Our health indicators are strong. Right now, we still have this overall kind of downtrend to deal with, but health indicators are good. So deploy some capital, make some money during this, just like we've been doing the entire time during this decline. Capture a bit of profit during these advances we've had, and then when conditions go back to poor, we back off again and get out. Sectors on the move. Oh, one final thing we want to look at is, this is really what I look at most of all, and what I put the most weight in, is how are my trades that I'm taking, or the stocks that, even if I didn't take the trade, my watch list, the stocks I'm have up on my screen that I'm monitoring because I'm interested in them, they've had good setups, how are they doing? And recently, the trades I've taken have done really well. The trades I've put up on my watch list that I'm watching on my charts each day are doing really well. On Friday, quite a few of the ones that I had been interested in broke out and closed higher on the day, so that's a positive sign as well. So that also helps me say, okay, I'm definitely willing to deploy some capital, even though not everything's perfect out there. Our health indicators are good, price action's a little bit iffy, but at least the trades I'm taking are working, and that's ultimately what really matters, because our analysis can be great, but if we're losing money on the stocks we're taking, then something's wrong. I'd rather be aggressive when the trades I'm taking are working, and if the trades I'm taking aren't working, then I have to step back and say, hey, I gotta check something out here. So right now, things are working in terms of the trades I'm taking, so I'm willing to deploy more capital. Sectors on the move, pretty much what it's been all along. Basic materials, industrials, healthcare's clinging in there, and then financials got added back in. Energy, I dropped back off. Energy was really strong the last week or two, but it just didn't come through this week, and some other stuff came over, and it just hasn't had enough. It didn't have enough of a burst to show it improving over the last few months. So we're still, if we look at all of these, the 1 week, the 1 month, the 3 month performance, basic materials, financials, industrials, healthcare a little bit lower on the 1 week, but financials, basic materials, industrials, healthcare, they're all hanging out in the top half of that list. Basic materials, industrials, financial, healthcare, all four of the top 5 over the last 3 months, all in the top half here, all in the top half here. And you could also dig into these a little bit more. So healthcare, maybe hanging out near kind of the bottom of those 4. So you could dig into healthcare, look at which industries are really doing well within that group to potentially hone in a bit more. And you could do that with all these groups as well. So those are the main sectors I would be looking at. And again, you could just do your scan list as normal. If you're a little pressed for time, maybe just select to only look at these 4 industries. What I'm doing right now, I'm willing to add some positions. I already have some orders out based on stocks that broke out on Friday. I just place the order near the original entry point. I don't chase it up. If it jumped 5%, I'm not going to buy it 5% higher than my original entry point. As you know, stock prices fluctuate a lot, so I just put it out at the original entry point. Maybe I get filled, maybe I don't. There'll be plenty of opportunities coming along anyway if we do continue to the upside. Current trades are working and near profit targets. That's going to free up some more capital again, putting me back to almost no capital deployed. So I am looking to take some trades. I also day trade stocks in the Euro USD. I like day trading because I can do it every day regardless of market conditions, and it's a good steady income stream. Whereas with swing trading, especially 2022 showed us that we can have long periods of sitting on our ass where we're not doing anything, and if you need that income, one of 2 things is going to happen. You're either going to sit there and you're not going to have income, or you're going to take trades which maybe aren't good, trying to force it, and you're probably going to end up losing money. So that's not a good idea either. So I kind of like having both the day trading and the swing trading. Day trading a little more consistent in terms of being able to deploy capital and find trading opportunities every day. Swing trading can be a little bit more sporadic, where we're aggressive for a month or 2, maybe even a year if conditions are really good, and then sometimes we have months where we're not doing much. Historical conditions always written at the bottom here. So that is your weekly outlook for this week. Have a great trading week. Until next time, happy trading.